What is going on, guys? Welcome back. Wanted to show you what I like to do in terms of little riskier investments. And I only do this, just to preface this, with a very small amount of money. And obviously, I'm very tactical with when I'm taking this approach to buying these stocks. I really wouldn't recommend anybody new to the market do this, but you're taking a look here at Corrivo Pharma. They obviously had an FDA drug failure a couple weeks ago, and you can see here their stock at the beginning of the month right around $2.23, and then you see two significant drops there as they trailed off. So what I elected to do was put in a market order to buy 15 shares of this if it met 38 cents, and it actually dropped down to 38 cents. So really my risk here extremely small, right around $5 at the time that I bought it. And then obviously you're hoping of one of two things. One, even a small recovery in the price here can get you a little bit of appreciation, but more importantly, if the company were to go out of business, you could lose the money. But a lot of times in pharmaceuticals, they'll be bought out by another competitor and you'll see an increase back of your stock price there at that point. So at this moment, if you do not hold on to a stock for more than a year, you do have a capital gains tax. But at the same time, you're not talking about a large amount of money anyway. If you can get, in this case, a 30 to 40% return on a relatively small amount of money. I mean, if I'd done 10, 15, 20, obviously my return would have been obviously much greater. But at the same time, you're risking that same money up front. To me, a $5 risk is really nothing that I would be concerned about, even if it became a total loss, which in this case, I don't think it will. But in the event that it had went back up to the $1.50, $2.50, maybe even $3 price point, you're talking about the availability of buying, a quality dividend stock if I wanted to, with that appreciation, versus maybe just losing the $5 that I would get paid in a dividend payment anyway. So you can always look for stock situations like this where you think you can really play the market. Obviously, with Robinhood, you want to be careful on any type of day trading, so you're going to want to hold it more than one day. But in a situation like this, I think you can easily justify the risk when you judge what the reward is going to be versus the absolute loss of possibly, a little bit less than $6. Love to know your thoughts on this. Appreciate you checking it out. I will be back in the week with more commentary.